Hey guys, it's Justin Goodbread here with Financially Simple. It is a Wednesday, and I wanted to deal with something today, just briefly. I've been in meetings nonstop this last few weeks. It's tax season for us as planners. We're doing tax planning, but in case you didn't know, the stock market is pitching a fit right now. You may see it. If you haven't noticed it yet, you will see it in your statements when you get those in the mail here, probably at the end of the month. If you haven't looked at your October, November, your December statement as of today is going to show that the stock market is being a little angry. It's like a kid throwing a temper tantrum right now. And I've had a lot of questions here in the last little bit. I finally slowed down. I just got out of a meeting. I wanted to slow down a little bit and answer some of the reasons on what's going on. Why is it throwing a temper tantrum? Well, the first thing I'm going to tell you is that in January of this year, the forward price per earnings, or what we call the forward PE ratio. I don't have time today to explain all this in detail, what a forward PE ratio is, but it's basically talking about the price per earnings of a stock. In January of this year, it was at a 16-year high. Think about that. In January of this year, it's at a 16-year high. I actually was talking with a client yesterday. And I said, remember, the only regret I have is in February, whenever we were doing our meeting, I wanted to do another rebalance, and you said no. I wish I'd have been a little bit more forceful and got a rebalancing, because the account would be a little bit better today. And he's like, yeah, Justin, I know. What I was looking at was the forward price per earning ratio, and that was at a 16-year high in January. Now, since the end of September, October, November, whenever the stock market started throwing its temper tantrum, the forward price per earnings ratio has dropped now back to where it was in 2014, in the summer of 14. Actually, I haven't looked at this last week, but it may be even a little lower than that now. So the stock market's forward projection, forward price per earning ratio, has dropped from a 16-year high back to the levels it was in 2014. Well, what does that mean? It means, according to this one measurement, stocks are at a discount. They're not as high as they were. They are on sale potentially. So you may be saying, well, Justin, if my account's down right now, what do I do? Well, you rebalance. If you're dollar cost averaging, you want to continue to do that. If you have monies on the side that you were hoping to get into the stock market, now, again, talk to your advisor, talk to your specific advisor, but now may be a time you want to do that. You say, well, Justin, is the market going to continue to pitch a fit? It could, but according to, and I'm printing this off, according to Consensus Economics, the economists have upgraded their forecast of the economy from where it was a month ago. You're like, what? Well, the market's bad. Well, because the forward PE ratio has dropped, has come back to 2014 levels, economists now, again, according to Consensus Economics, economists are now saying that the outlook for the economy is not as good. It's been upgraded. It's not as bad or doomsday-ish as it was 30 days ago, or almost now even 60 days ago for that matter. So the stock market's throwing a fit. I get it. Does that mean you should panic? Nope, not at all. For most of us who are in what's called accumulation phase, where we're trying to grow wealth, man, continue to dollar cost average. Continue to put money in through your retirement accounts. Like I said, if you got cash on the side that you've been waiting because you thought the market was too high, you may want to go in right now and look at putting some money in. Again, talk to your advisor. I'm not telling you, giving you advice here. I'm just saying you may consider doing that. Now, what about if you're getting close to retirement? Well, if you're getting close to retirement, surely by now you've already had a conversation with your financial advisor. If you haven't, now's the time to talk. Does that mean the market's going to crash? I'm using the C word. Not necessarily. The economy outlook is still pretty decent. But now's the time you may want to be double checking everything through this next cycle that we're getting ready to go through. See, the economic cycle is pretty simple. You go through a recession, depression, you go through recovery and expansion, then you go into that recession or depression. Right now, we're in that expansion mode. The economy's booming right now. So we may be coming up to that recessionary trend. I'm not saying we are. But if you're getting close to retirement, or you're in retirement and you need some money out of your accounts, now's the time you want to double, triple check things, okay? I'm going to be doing some videos coming up on what is risk tolerance. I'm going to be doing things why I shouldn't buy individual stocks or why I should buy individual stocks. But for today, I wanted to just take a moment and say, yeah, the stock market's pitching a fit. We get it. it's frustrating to us planners because we see clients at all different phases of life. No matter where you're at in life right now, now is the time not to allow emotions to control you. Now is the time where you want to talk with your certified financial planner. Do a double check. Get them on the phone and say, hey man, what's up? Let them talk to you. Let them explain what's going on. Look, if you don't have a certified financial planner, we have a new member coming onto the team in January. We are going to have capacity to start helping some additional folks. If you need some help, reach out and say, hey, brother, I need some help, man. I'm scared of the stock market. Or I'm retiring in 3 years. I'm retiring in 5 years. I'm retired and I don't want to lose my money. How do I do this? So now's the time when you want to now's the time you want to talk. The market's pitching a fit. It's okay. It'll be all right. Am I saying the market's going to come back? Nope. It may drop some more. But now's the time, nonetheless, for you to consider your personal finances and not to use emotions. So like I said every week, guys, life is hard, life is complicated. Finances, the stock market, it can make you want to pull your hair out, which is why I shave mine off so I don't have to yank it out. Money doesn't have to be complicated. Let's continue to make our lives at least financially simple. I'm headed to another meeting with another one of our prospective with another one of my clients, client right now, that we're doing some year-end tax planning on. Y'all make it a blessed day, and if I don't talk to you between now and Christmas, Merry Christmas to you.